On May 20th, Tom Lee's Granny Shots ETFs rebalanced, 6 stocks in, 3 stocks out. But here's the part that actually matters, and that nobody else is going to point out. The 3 names they just deleted, Amgen, Chevron, and PPG, are the exact 3 names they added back in February. 1 quarter in the portfolio, then out. If you want proof the Granny Shots process is actually a rules-based system and not a buy and hold guess, this rebalances it. Let me show you what changed and what it tells you about where this portfolio is pointing. First, what came out? 3 names: Amgen, Legacy Biotech; Chevron, Traditional Oil and Gas; and PPG, Industrial Coatings. Notice the pattern: old economy, defensive, slower growth. And here's the detail that makes this a real story. All 3 were added just 1 quarter ago, in February. Amgen, Chevron, and PPG qualified in the February rebalance, sat in the portfolio for 3 months, and by May, they were gone. That is the system working in real time. A name does not get a permanent seat. It holds its spot only as long as it keeps hitting the themes. Now what went in? 6 names: CF, that's CF Industries, Fertilizer and Agriculture; LLY, Eli Lilly, the GLP-1 and pharmaceutical giant; NOW, ServiceNow Enterprise Software; ORCL, Oracle, increasingly an AI infrastructure story; PM, Philip Morris; and UNH, United Health, Managed Care. Here's the mechanic that drives all of this. To be in the portfolio, a stock has to align with at least 2 of Fundstrat's 7 investment themes. Not 1, 2. When a name stops hitting 2 themes, it comes out, no matter how good the company is. That is why Amgen and Chevron got cut, not because they are bad companies, because the themes moved. So what are the 7 themes? 3 are shorter term: style tilt, seasonality, and PMI recovery. 4 are longer term: millennials, global labor supply, energy and cybersecurity, and easing financial conditions. Now, Fundstrat does not publish which 2 themes each stock hits, so this next part is my read, not their stated tag, but the additions tell a coherent story, and it is worth walking through each one. Start with Oracle and ServiceNow. Both point straight at the technology and energy and cybersecurity themes. Oracle has quietly become one of the biggest AI infrastructure plays in the market. Cloud capacity, data centers, the physical backbone the AI boom runs on. ServiceNow is the enterprise software layer companies use to actually deploy AI into their workflows. 2 different angles on the same megatrend. Then Eli Lilly and United Health. These lean on demographics, the millennials theme, and the aging population tailwind underneath it. Eli Lilly is the GLP-1 story, the weight loss and diabetes franchise that has reshaped the entire pharmaceutical landscape. United Health is managed care at scale, healthcare spending that compounds for decades regardless of the economic cycle. Both are secular, and both grow without depending on a strong economy. CF Industries is the interesting one. Fertilizer and nitrogen. That ties to global labor supply, agricultural demand, and the easing conditions backdrop where commodity producers tend to do well. And Philip Morris is the classic defensive income anchor, steady cash flow, a name that earns its spot through stability rather than growth. Step back and the rotation is clear. Out of traditional energy and legacy biotech, into AI infrastructure, secular healthcare, and selective commodities. This is the portfolio leaning harder into the themes Tom Lee believes are accelerating, and trimming the ones that have run their course. And notice it is not chasing only high-flying tech. It paired the aggressive AI names with defensive healthcare and income. That balance is the Granny Shot signature. Own the themes, but spread the risk across them. Here is why this matters if you own GRNI for income, not just GRNY for growth. Both funds hold the same underlying equity portfolio. The rebalance hits both, so when GRNY rotates into Oracle and out of Chevron, GRNI's income overlay is now writing options against that new portfolio too. That is the part most income investors miss. The quality and volatility of the underlying stocks directly affects the options income GRNI can generate. A portfolio actively rotating toward higher conviction, higher volatility growth names can support a richer options premium than a static basket of slow movers. The rebalance is not just a growth investor event, it is an income investor event, and it answers the criticism head on. The knock on granny shots is that the strategy is unconventional and hard to predict. But watch what it actually did. It added 3 defensive names in February, the themes shifted, and it cut those same 3 names in May. That is not unpredictable. That is a disciplined system pruning on schedule, and the market is responding to that discipline. The same week as this rebalance, Fundstrat launched the granny shot strategy in Europe as a UCITS fund. The strategy now trades in London, Milan, and Frankfurt. The whole suite crossed $4.8 billion in assets. A methodology that was supposedly too unconventional to trust is being exported to 3 more exchanges. The capital is voting. There is a training parallel here that is almost exact. A good program is not the same every week. You rotate exercises as you adapt. You deload when a movement stops driving progress. You add volume where the stimulus is working. The lifters who plateau are the ones who run the identical routine for a year because it once worked. A portfolio is the same. Holding a position after its thesis has expired is running a stale program. Chevron earned its spot in February. By May, the themes moved, so it came out. That is the portfolio version of dropping an exercise that stopped working. Not loyalty to the lift, loyalty to the result. If that framework lands for you, hit the like button. It helps people who think this way find the channel. 2 takeaways from the May rebalance. 1. The deletions confirm the process is real. Names get cut when the themes move, even 1 quarter after being added. 2. The rotation toward AI infrastructure and secular healthcare is the portfolio betting on the themes Tom Lee thinks are accelerating. And that same portfolio is what GRNI's income overlay now sits on top of. The next quarterly rebalance lands around August. I will break that one down too. So if you hold either fund, subscribe, and you will not have to dig through a PDF to know what changed. Comment below. Of the 6 editions, CF, Lilly, ServiceNow, Oracle, Philip Morris, United Health, which one do you think is the strongest fit for where the market is heading? I read every comment. I am built and bankrolled. Let's get to work.